Bitcoin hash rate taps new milestone with miner holding at 1-year low. Data shows that Bitcoin miners' Bitcoin BTC reserves or Bitcoin reserves are at their lowest since December 2021, despite a dramatic hash rate renaissance. Bitcoin is seeing new records in network activity as volatility sends Bitcoin price action to fresh 5-month highs. Look at that 23,157 queued in there. Data from resources, including Mining Pool Stats, confirms that Bitcoin's hash rate hit new all-time highs on January 26th. Hash rate passes 300 exahash a second threshold. A lot of people were saying that this might not even happen until the next halving. And now all of a sudden we're seeing it happen. So this is pretty cool. And another example of Bitcoin's blitz recovery from the pits of post-FTX woes, network hashing power is now bigger than ever. Hash rate, which is an expression of the processing power dedicated to the network by miners, is currently at 321 exahashes per second, according to Mining Pool Stats raw data. Despite being only an estimate and impossible to measure entirely accurately, the latest readings are quite the feat, having never crossed the 300 exahash a second level before. Mining firm Brains likewise confirmed the numbers in its live reporting feed. Other trackers from BTC.com and Blockchain.com have slightly lower estimates, both being around 275 exahash a second on the day. The latter shows the hash rate hitting an all-time high of 276.8 exahash a second on January 20th. Quote, your wealth is more secure than ever, end quote, popular commentator BTC Archive wrote in part of a Twitter response to the data, indicative of improving sentiment across the Bitcoin space. Hash rate is a key component of Bitcoin security, and significant drawdowns result in network difficulty rising to entice more miners to participate. Network difficulty is also set to reach levels never seen before this week in a nod to fierce competition in the mining sector. According to data from BTC.com, the next automated readjustment will send difficulty an estimated 2.75% higher to a 38.62 trillion or to 38.62 trillion. The previous readjustment delivered a 10.26% increase and Bitcoin's largest since October 2022 and only the second double-digit hike since mid-2021. Now, why is this relevant, right? Because we've been talking about this over the past, few weeks, really, basically what had happened, right? And this is very important to pay attention to if you are trying to understand what's happening in this market. And I have a lot of people that will talk to me on a day-to-day basis. Yesterday, I was talking to a buddy at jiu-jitsu, kind of sitting on the mats after we finished rolling and chatting. And there seems to be a lack of education surrounding Bitcoin. He's like, well, it's very volatile. You see it go way out to 60,000 and then come back down. Yes, like I told him, I'm going to tell you guys right now, just in case there's anybody that's not familiar with my position on this and where those numbers come from. Bitcoin goes through a halving cycle that happens every 4 years, and you can line up essentially this hopium, huge rises in the increase in price of Bitcoin, to somewhere between like 6 months to a year after a halving happens. And the reason why this happens is because it's all based on the price to mint a Bitcoin, right? So if we look at the average cost to mint a Bitcoin, we can base that primarily off of power, of course, and we can get those numbers by looking up nodes across various geographical regions, find the average cost in that region, and kind of see which one or how much it costs, and then basically extrapolate, essentially what the price of Bitcoin would be based off of that, based off of the cost of energy, right? And when the halving happens, the reward is cut in half. So when you have basically the halving happen every 4 years, the amount of Bitcoin that's minted per block, which is like a block is basically a ledger, right? It's going to have a certain amount of transactions in it, and that gets submitted to the chain, and then miners pick that up, and in return for mining that, essentially they get a block reward. That block reward gets cut in half. So when it gets cut in half, it's naturally going to increase the cost to mint a Bitcoin, which then incentivizes the miners to sell that Bitcoin for more so that they can pay for the cost of actually minting it. The oddity that happened here, obviously, with the miners is due to a few things, though, and we'll get into that.
Established in 2017, Octominer is an international mining hardware company. They manufacture and engineer the best mining equipment in the industry and supply rigs to some of the largest mining farms around the world. Their GPU mining rigs also integrate with the top crypto operating systems like HiveOS, MinerStat, and Simple Mining. All parts come with an international 1-year warranty. Exciting news! They will be adding ASIC miners for sale to their website soon and launching a new product built specifically for ASIC home miners. Please visit octominer.com or email support@octominer.com for questions.
What happens after that is the price of Bitcoin goes up and a bunch of people see the price of Bitcoin starting to go up. These people are not necessarily educated on the way that Bitcoin functions, so they're not even aware of the halving cycle. In fact, I would posture that 90% of the people that are even invested in Bitcoin probably don't fully understand the effects of the halving cycle on the price of Bitcoin, right? And this poses quite an interesting problem with Bitcoin as it pertains to volatility, because the thing that you end up here with is a position in which people see price go up and invest without the understanding of why price go up. And so they keep driving the price further and further and further, and really past a certain point, right, which is the actual cost to mint a Bitcoin, it is just all speculation. So you have a bunch of speculative money in the market, right? And that drives the price way, way up. Usually it looks like about every 4 years, the price goes up about 300% over what the previous cycle's all-time high is. Let me explain what I mean by that. So every 4 years, like I said, the cycle happens. So let's just take like 2016, 2017 cycle, and we saw the price of Bitcoin hit $21,000, right? Well, after it hit $21,000, it came back down to the previous all-time high and actually a little bit lower. And there's a reason why it goes a little bit lower. We'll explain that too. So in this previous cycle, it goes up about 300% over that, right? It actually went quite a bit further. I was speculating around 63,000. If you guys remember, we talked about this way, way back in 2020. And I was like, I would think that the top would be around 63,000. And that is because it's just based off of the halving cycle, nothing more, right? It's, hey, what we see is about a 300% increase to the top, and then it's going to dip back down. The price that it goes back down to afterwards is the previous all-time highs, usually the previous cycle's all-time high. So the previous cycle's all-time high was about 21,000. However, we have to take into account what happens in the energy industry as well, which was a huge increase in the cost of energy that happened here recently, meaning that we are close, of course, to the previous all-time high, but because of, the way that the economy is working and the way that energy influences it and so on, we have a higher cost to mint Bitcoin now than what would have been initially anticipated. So there is a little bit of extra influence over that, but we can reasonably assume that you are going to sit, even if we're looking at this 4 years ago, somewhere around this time, once it comes back off of the hopium and dumped back down, between 21,000 and 23,000. That being said, what we ended up having, of course, was a bunch of people that entered into the mining market that are also not familiar with the halving cycle, right? We also had a bunch of lenders entering the market that are, once again, not familiar with the halving cycle. Now, the lenders end up being actually in quite a good position either way, maybe. And we'll talk about this because this is where things got weird. Basically, you had mining equipment that was selling for way more than it was actually going to be worth after the price of Bitcoin took a dive. And what this did was put miners in a position where they had loans that were way too high, and it was forcing them to sell their Bitcoin even below what it cost to actually mint the Bitcoin because they had to keep up with paying the loans. What has ended up happening, of course, is that we have miners going bankrupt and lenders repoing the miners. In a unique case, though, that ended up happening here is that the lenders are getting back hardware that is not worth near what they lended the miners to buy it. So it's not like they can repo it and even get a reasonable amount return for selling it back to the used market, which is kind of an issue. So what they've begun to do, and why you're starting to see not only a rise in the price of Bitcoin to the actual cost to mint a Bitcoin, but you're also seeing, of course, the highest hash rate network all-time highs, right? That is coming from the lenders actually mining with the mining hardware, because it's more beneficial for them to mine with it than it is for them to sell it at an incredible loss. And that is what brings us to the position that we are in now. Yes, it is unique compared to previous cycles, but it still holds true across the halving influence, right? So it's fun to look at the little nuance, but still make sure that you're paying attention to the actual halving cycle itself so that you don't get led astray by people telling you that the next bull run is happening right now. As best as we can tell right now, there is no other bull run that's going to happen at least until 2024, 2025 timeline, because we'll have an approximate halving in basically the Q4 of 2024. And then we'll have to wait 6 months to a year for that to happen again. Now, there are speculations about breaking out into like a larger cycle, the macro cycle or whatever. I don't know if that could happen, right? As far as where I would sit is I'm just going to pay attention to, history rhyming with itself, kind of like we saw in the previous bull run. And I'm going to sit back and just kind of hang out as far as that's concerned. So that's kind of what I'm seeing as far as this is concerned with, of course, what's happening here too. And it is also important to note that things are getting really interesting as well on some of the stuff that's happening with Bitmain, because Bitmain essentially gave a few of these miners some credits or coupons, right, for basically machines that they had ordered that they never got delivered, presumably, right? Some of this stuff could be like the KA3s, which kept getting delayed, and big miners were ordering in bulk, but then ended up, of course, going bankrupt, and then they get these coupons. So Core Scientific, for example, right now is auctioning off like $6.5 million worth of coupons for Bitmain units. So there is stuff like that happening too, because they got to, basically sell everything they have to compensate for the bankruptcy and so on. And you end up in this fun position. This is, of course, the best time to capitalize on building, at least from my perspective, not financial advice, but for building up a mining farm. If you wanted to, at least it would be the cheapest time, right? The bear markets are the times when you can build out for that type of stuff. However, if you go look at, of course, your mining profitability, most of it is going to be in the red. And with rising energy costs, it's going to be very hard to predict, of course, future profitability. That being said, let's go ahead and continue this. Miners get a chance to balance the books. Analyzing the climate, CoinLupin, a contributor at on-chain data platform CryptoQuant, warned that miners are still selling their Bitcoin reserves. And I do tend to agree that this is happening, right? We saw the big inflows into Binance last week, possibly to shore up capital in the event of a market reversal. Quote, now they have improved profitability for the first time in a while, and mining costs are lower than Bitcoin prices. Normally, more active mining and holding could occur, but now they seem to see it as an opportunity to secure cash, he wrote in a blog post describing reserves as declining at a rapid pace. Quote, one day price adjustment could happen in the section where they get enough cash and start collecting Bitcoin again. They constantly reduce their Bitcoin holdings during the rise. CryptoQuant's miner position index, which measures Bitcoin outflows to exchanges from miner wallets relative to their 1-year moving average, has captured several withdrawal spikes since January 14th. At 1.8 million Bitcoin, miners' reserves currently stand at their lowest since December of 2021, which is actually not as bad of a sign as you would expect it to be. It does mean that there's a bit of recovery on the cash flow for miners, which I think is something to pay attention to. Thanks for checking out this clip from the Crypto Mining Show. You can check out the full episode here or more crypto content down here. Also, I'd like you to check out my locals page at sonofatech.locals.com, where you can become a member for free or choose to be a $5 a month supporter that unlocks additional content.